Evening traders, a warm welcome to my channel, Smart Index Edge. I'm Naldakshi Swami, coming up with the same topic of day trading. Day trading is an allure because of its powerful attraction of making quick money, but hardly few traders are successful in day trading. So let us uncover the truth beyond day trading. What happens? What is the problem with the day trading? So, let us understand the trader's mind. When a trader comes to the trading platform, when the market opens around 9:15 a.m., he will be exposed to high stake environment. Market opens, opening bell rings. He is already prepared for the trade with the trading plan, everything. But what happens is the market starts fluctuating up and down. So he will be exposed to a very highly volatile environment. And what happens to the trader's mind is usually in human mind, in midbrain, there is a point amygdala, which is responsible for the response creating for fight or flight response will be created from there. So immediately adrenaline rush will be there in the mind, and if the mind will start fighting against it, or flight response will be created in the human mind. So he will be affected emotionally, and he will have cognitive biases. Cognitive means intellectual bias. These are all the challenges for the day trading. What are the key challenges in day trading is emotional traps. FOMO. FOMO means fear of missing out. Immediately when the market opens, he has planned for the long trade. He has made analysis, trader has made analysis, and the market is behaving according to him. Immediately, he jumps into the trades due to anxiety about missing opportunities. There, his reasoning power is lost. Just he jumps into the trade. After jumping into the trade, for his disappointment, market starts printing red candles. He has entered into the market. It starts printing red candles, he will be in loss. When he is in the loss, definitely flight response will be triggered in the human mind due to the adrenaline rush. So rational thinking is lost. So he gets panic. He will erase the trade. This is the challenge. Fear of missing out is the greatest challenge for the trader. And later what he does is, he erases the trade and he will be in loss. He will engage in revenge trading. Revenge trading means he wants to recover the loss what he has lost. So there he will not be applying mind or any strategy or any plan, just randomly enters into the market again and again, over trades, and finally he will be in the loss. Sometimes some traders will have overconfidence also. Why? Because they will be winning the trades. When the winning streaks can inflate the confidence. What they will do? They will go into reckless trading behavior, uncontrollable trading behavior. They will exhibit it. So these are the key challenges in day trading. Jumping into the trade, over trading, and overconfidence. And sometimes mind is such that it will have cognitive biases also. Cognitive bias means intellectual bias. I know everything. I've studied the market. I can analyze everything. Our intellectual mind says, I know everything. But this cognitive bias will cloud the judgment. You cannot judge properly when you are having a bias. For example, you will have a confirmation bias. Somewhere you have tested some strategy, like just for an example, I'm telling something, 3-weight soldiers or something. If I see that, I can enter into a trade. You have read about that. That is a trend continuation pattern. There we can enter into it. That is a bias with a preconceived notion. The mind seeks information that aligns with the preconceived notion. You already have a preconceived notion. You are not able to see that. And sometimes what you will have, anchoring bias also. That is a fixating on the first piece of information. You see the market going down. The first piece of information is down. Press the button. Market is going to go down. Press the button. Bias is down. Everything is down. That is anchoring bias. Even if you see, that's what happened in Nifty on Friday. Within the first 15-minute candle, the range of 15-minute candle was 121 points. After seeing a huge red candle, people do not wait for the closure of the candle, they press the button. But if you would have seen the chart, what happened is for another 15 minutes candle, they traded within the range of the first 15-minute candle, spending within that range. In between, forming green candle, alternating with green and red candles. What if you would have taken the position of put option at a high price? You wouldn't have held that position. Definitely you wouldn't have held that position. That is the problem actually. Jumping into trades with the fear of missing out opportunities. That is FOMO. You don't do proper judgment. You don't wait for that. That is the problem actually. Sometimes what happens, even if you are right, by that time your psychology will be so much ruined. bruised. Even if you are right, fear of losses will, will be more than value in the equivalent gains. Even if you are right, you are not able to hold the position. That is the psychology, it happens. So, traders, mind is your greater ally. You need to master yourself, then master the market. What you should do for that? What you should for that is you should have a strategy for mastery. Building a robust plan. You should have a robust plan. Define entry and exit points. You should have your entry point and exit points also. Once you enter, some traders will not define their exit. Exit is also very important. As soon as you enter, your stop loss is also very important because you have to manage risk. If you do not manage the risk, you are going to lose money. So you should have risk management strategy also, right? Some people, what they do, okay, what happens in option trading? They enter it. Somebody on YouTube, they come and randomly say, keep 10 rupees or 15 rupees stop loss. Take the trade. But it is not so. It is not so because your entry is not perfect. You have not defined your entry. You have not entered into the market with the definite confirmation. In all my previous video, I have tried to explain how to enter early with confirmation with the help of so many beautiful indicators, TWAP, stacked indicator, moving average, RSI, net volume, everything I have explained. Some people, what they do, they keep the stop loss. They say, I have kept mental stop loss. No, it should be on the system. Your stop loss on the system. You should accept loss. You should treat losses as learning opportunities. Yes, it is part and parcel of the trading game. It needs. So, for mastering your mind, mastering psychology, you must have a robust plan. Somebody, one of my viewer asked me, what position did you take? Did you take the sell side position or a buy side position? Clearly, see in an intraday trading, both sides of trend can emerge in the market. We are not trading for days. We are trading within a day. You can get two types of trades. Down movement as well as up movement also. You should be prepared. I was prepared because I could not enter into the market when Nifty fell 121 points within a single 15-minute candle. I don't dare to press my sell button, because I need to see. Sometimes trap will be there. I need to see how much it is going to retrace back. And when the sellers will come again. When I checked with that, RSI already was in 36 level. RSI reading was around 36. It was below 50 in the 15 minutes time frame. So I thought, based on my liquidity sweep concept, which I had in my mind, I decided, let me wait for the oversold position. Let me trade for a reversal trade. So it gave a beautiful trade, confirmation trade with the RSI divergence around 11 a.m. That was a beautiful trade. I went for an buy side trade with my own confirmation with the technical indicators, TWAP, RSI, and my reading of the RSI with the step line chart, and applying the moving average, cross-checking with the 5-period moving average, Hull moving average, HMA. Then I was able to make proper decision. So you need to stay calm. You need to master your mind. You may analyze the chart very well, but you cannot be a good trader because you have not mastered your mind. See, you need to adapt to the changing conditions in the volatile market. Immediately, you have to switch between your strategies. Your reflexes should be very good. You should be adaptive. For that, actually, some people immediately they scalp. They scalp they stay within 1 minute time frame, they scalp. Scalping with too many lots. Some things they might have mastered, they are capable of doing that. If your personality is not suitable, you cannot go and take that trade. Many YouTubers, they come and post, they press 6,000 quantities, 900 quantity, they press it, they take so many quantities, they will be in 1 minute time frame, and they will also discuss the concept for what reason they are taking. No, you are not able to master that game. It's not possible. Unless you trade efficiently in your dump trading thing, then only you can master. You cannot apply with the money, and you are not going to trade with the real money. You are going to lose it. Whatever may be the strategy, whatever may be the trading plan, if you are not disciplined, if you do not keep your mind calm, and if you do not have rational thinking, so you can never succeed in your day trading. That's why everybody says day trading is very difficult. Day trading is not simply looking at the chart or analysis. It is not a chart analysis or analyzing, seeing the stocks or playing with the indicators, but it is also a psychology. You have to master that. If you stay calm, if you stay put, wait for the trade to come to your side, then you can think properly you can apply your mind, then you will have discipline in your trade and it leads to rational decision making. You can do that. You can succeed. So, for that, what you need to do, what happened that day? Why did you lose money on that day? Why you were not able to trade? What was the mistake I did? What were the emotions that ran into your mind? Those are all the things you need to write down. That is, you have to journal it. By journaling it, what you are going to see, if you go through your journal, you can see the pattern of probably same pattern might have repeated in your trade. You might have taken over trading, revenge trading, or jumping into the trade. Everything comes into that journaling. And then you can tackle your psychology, what need to be done. First, you need to tackle your mind. When you start tackling your mind, naturally, success comes on its own. So, success is the result of both strategy and psychology. You must understand, trader is exposed to a high stake environment while day trading. It is not like a swing trade. It is not a relaxed sit and go. You need to finish your game within that day. Sometimes previously, brokerage firms used to give leverage. So that pressure was also there. Now that is good actually. They are not giving leverage. You are playing with your own money, but you should be responsible for that to take the trade. So traders, mind is your greater ally. First, master yourself. Then you can master the market. Market will be under your control if you master your mind. So by this, saying this everything, I hope you understood. Now you will try to do. Bring in discipline into your trade. Do not jump into the trade immediately with your bias, whether it is a confirmation bias or anchoring bias or overconfidence or FOMO or revenge trading. You are not going to lose anything. From today onwards, you are going to take an oath to master yourself. So market will follow you. Thank you very much, friends. Nalnakshi Swami signing off.